Nothing really stands out in terms of high probability for me. Nothing really stands out in terms of high probability for me. And as I want to remind you, when we are looking at the markets and the way I'm teaching you as my student, and or if you're a casual viewer, if you're now just listening for the first time, I try to teach a concept that I dubbed smart money. And that means trading when it's smart to do so. Not, well, I got time to be in front of the charts. I have time to be here, and therefore the market should submit to my will and or my system. And sometimes, as we have seen, it simply doesn't want to do that. Now, what makes this market right now low probability? Well, I'll give you a couple things. I tweeted this morning rather early asking what the criteria was, list of criteria that would constitute a high probability trade setup. Number one, you have to have some measure of understanding where that weekly candle is going to expand to. And I don't have that. I haven't had it for, going over 2 weeks now. And I've admitted it. And I've been upfront and told you, I don't have a real good read on what it wants to do in the context of high probability. Now, can I get in there and take 2 handles here, 2 handles there, 3 handles here, 2 handles there? Yes. But it's nerve-wracking for me. And it would be very difficult for you to follow that. And it would be really just a waste of time. I want to teach, as I've been teaching, if we're going to look for a setup, it needs to have some kind of higher time frame draw on liquidity. Why do I believe you, as the analyst, where do you believe the market's going to draw to on a higher time frame? And if we can't ascertain that with a one-sidedness, where it's so hard to argue the other side of the marketplace, then we don't have high probability. So why would you want to go in? Why would I sit out on Twitter? Why would I go on live stream when I admittedly said that I don't have a good read on it right now? So what did I teach and preach? If the market's not giving you something, go do something else. Now, as a young man in 20s, this would drive me nuts, and I'd be in there trying to hammer and try to do more and do more and do more, and I would hurt myself, much like some of you probably have done. I read one of the tweets from, I believe his name on Twitter is ICT student. He tweeted to me saying he lost $40,000. Listen, you have to stop. You have to know when to stop. Now, I've given rules to know when there's high probability, when there's low probability. And again, I've stated this. I've been away because of that very reason. So pushing the envelope, trying to do more when it's not likely to do so, whether you're in a funded account or not, just, it doesn't make any sense. So $40,000 is something that obviously hurts. It pinches, I know. But look at it this way. You bought a car you shouldn't have. Now you're stuck with the payments. There you go. That's the way I looked at it. That might not fit for you. It might not be equivalent, but that's how I looked at it. When I hurt myself and blew account, that was very hard for me because I didn't come from money. So you have to do, number one, the rule in this is preserve capital. And you have to have an understanding of when you're likely to hurt yourself by forcing something that isn't there. Forcing something in the charts, like Rorschach, it's that ink blot phenomenon. Put an ink blot in front of 2 people, they're going to see not the same thing. They're going to see something totally different. And when the markets are in low probability conditions, and this is the part where you write these things down, folks. When low probability conditions exist, everybody's system is going to talk. Everybody's harmonic, everybody's Elliott wave, somebody in GAN is going to have some excuse as to why it's going to go up, supply and demand, ICT order blocks, it's going to be breakers, it's going to be this. They're all going to have something that they want to see in price, because that's the perfect excuse for them to push the button, because they have no patience to wait for the market to come out of this low probability condition, which I've outlined for you. I told you this is what I want to see. It needs to come out of that range. And if I'm not mistaken, I believe I put it on Twitter. I think it was a short little video on Twitter. If it isn't, I know it's on my YouTube channel. One or the other. It was something I talked about audibly. And I showed the chart and said, this is what we're looking for. It needs to come out of that range. Until it does, We're in a very small intraday scalping scenario. So it's a scalper's market, but it's such a small little range. If we're forced to do a scalp, going back to that criteria that would makes a trade high probability. Number one, I don't have, maybe you have had, but I don't have a clear indication of where that weekly candle is going to expand up to or down to, because it could do either one. And because it can do either one, I have to wait. I'm not out here trying to show you I'm a jack of all trades in every single market condition every single day. I'm teaching you how to follow a model. I'm teaching you also how to look for high probability. And when it indicates to me that the market's simply not trying to do what I would require of it for the model I'm teaching you and the models that I teach my other students, I have to sit still. And there's nothing wrong with that. That's not weakness. That's an advantage. And I'm not trying to make light of it or make fun of it, but that's the reality of this. If you don't know what you're doing and you can't control yourself, become impulsive and you push, try pushing a boulder up a mountain. That's the equivalent of what you're trying to do right now. Take a step back. You might be seeing people out there getting lucky. I promise you folks, if they continue to do this kind of stuff, the market will shred them. Anybody can get lucky. And I got lucky for months when I first started. And then the inevitable came. So don't look at, well, I might get lucky during this because I don't have the time, the benefit of time. Because the sands of time in my hourglass are ticking down because I have to do a funded account challenge. I have to get to funded status. I have to do this. I have to do that. But those grains of sand, you ever watch an hourglass empty out? When it first starts, it's like, man, this thing's going to take forever. And then as it gets halfway down, you're like, oh, well, I got to go back and wait that same amount of time for the remaining half of sand to drain down to the bottom of the hourglass. It seems like it goes forever. And then you get down to that last tiny little 1/5 or 1/8 of the volume of sand. And it seems to go real, real fast, kind of like old age. When you're young, you feel like you got a lot of time, but you want to rush. Me at 50 years old, getting ready to turn 51, I look at it now as I don't have a lot more time on the other end. And I want to go real slow. I want things to slow down. That's what you want to do in your trading. I didn't see that as a young man. I wanted fast and furious, turbocharged, always, full steam ahead. And it couldn't get there fast enough for me. Now, because I've hurt myself over the years, I've learned that lesson painfully. And one of my students has just now paid $40,000 for that lesson. You don't need to do that to learn it. Sitting still is a skill set, because capital preservation is the number one rule in speculation. Because if you can't follow that rule, it doesn't matter how good your system is. It doesn't matter how good your mentor is. It doesn't matter how many competitions you won, how many trophies you got, how many people like your posts, how many people follow you on YouTube. It does not matter. All of that will not help you if you cannot control and keep your money. You have to have that rule set. And by me teaching and preaching and doing it, when I have nothing to act on, I have to sit still. In truest form, paid students of mine would fade my analysis and then complain how it didn't work for them. My analysis would work, theirs didn't. They're saying the concepts don't work. That's a personality flaw. Pushing in this environment, pyramiding in this environment. Stupid. Don't do that. You're not in a low resistance liquidity run condition. You're not. All of these things that are going on around the world. We have war, several wars on the horizon. We have multiple bank collapses and closures, and more on the horizon. Central bank digital currencies are looming. All of you got good credit. You want to buy a house? Congratulations. And you have to pay more for someone that doesn't have it. Does that make sense to you? Like, we are in the upside down right now. And you're all trying to put blinders on, ignoring that everything is getting tore up with chaos. So the markets are sitting still. They're not in a climate where big money is in there trying to do anything. Because if they were, it would be moving around. It will not stay like this long. Now, 2 weeks may be a lifetime for some of you. I understand. I was there too when I was a young man. I was thinking to myself, man, this is going to go on for years. No, it doesn't. The market, I think it was Paul Tudor Jones in Reminiscence of a Stock Operator. Something to the effect that the markets can stay irrational longer than you can stay solvent. And if I butchered that, I apologize, but it's pretty much close to what I believe that book referred to. Meaning that the market can behave in a manner that does not allow you to profit or participate with an opportunity that would result in a gainful outcome. It can do things irrationally, stay in a range that just simply doesn't permit you to do what you want to do on a typical basis of trading a certain model, looking for this thing to happen, looking for that to happen. It can do that longer than you can endure it and stay solvent. And that's all we're in right now. Now, there's going to be people out there say, but look at this ICT, look at this. I did this, I did that. You're supposed to be the world-class leader in trading, blah, 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 blah. Listen, man, I looked like a superstar when I first started. And I had no skill. It was all luck. Luck, luck, luck. People get lucky all the time. They win the lottery. But you keep pushing this environment, trying to demand things from it that it's not likely to deliver to you. It's going to bite you. And then when it does, impulses are going to come. And you're going to trade when nobody's looking, and you're going to blow your funded accounts. And you might get those free resets. But you still know you did damage. Try to avoid that. Don't push so hard. Nothing says you had to trade the last 2 weeks. Who says that? You did. But you don't understand. I understand more than you realize. These markets aren't going anywhere. Price is this stagnant right now. Look at the daily chart. You have wicks and tails, both end up and down in that range. I saw a tweet, but I thought 100 handles or so is enough. Well, if you're looking at a range that is likely to leave and go somewhere, that's plenty of range. But there's nothing indicating to me, and I don't know what it's doing right now as I'm talking to you. So I don't know what price is at this moment. It could be behaving in a manner that, is doing something wonderful right now. I don't know. I'm staring at water. So you don't have high probability right now. And if you made money, I'm going to be honest and tell you my opinion. That was coincidence. It's coincidence because nothing in the market right now is behaving in a manner that constitutes high probability. Back to that list, the criteria that lists, or you should be listing, having had a list from all the teachings and lectures I've given, you got to know where the weekly chart's going to expand. Because if you don't have that higher time frame sponsorship behind the move, because large flows in delivery in price is going to be seen in an expansion on that weekly chart. It's going to be reaching for some measure of value, either fair value or to reprice to an inefficiency, one or the other. But the list and criteria for high probabilities, we must have an understanding of where that weekly chart's going to expand. And if you don't have that, let him get out of here. Hold on. If you don't have that, you are immediately you're in a low probability condition. Now, can you take trades in low probability? Yes. Are you more prone to be incorrect and lose? Yes. When you win, you won't look at it that way. You'll look at it as, well, I have skill. I outperformed my model. That was the excuse I gave myself when I was coming up. Well, I'm better than that model. And I've had models humble me that I've created where I tried to outperform them, and I've learned my lesson with that. So rules are there for a reason. You don't cross the center line when you're driving. If you do that, you're likely to do what? What my son did, cause an accident. That was the first rule I told him before I bought his car. I said, do not cross that center line, ever. Don't ever do it. If you do that, 80% of the accidents won't happen. Don't speed, don't drive impaired. He doesn't drink, and don't cross that center line. And you're pretty much, in the hands of the Lord or the performance of the other people driving around you. And you can't control those things. So right away without weekly expansion or an understanding where it's going to reach for, you are without high probability. Now, assuming that you could, we don't have that. I don't have that right now at present for ES. I don't know where it wants to draw. So I have submitted myself to the rules. I said, okay, well, I can't do anything. Because I can sit out here and tell you what I think it might do based on parts of the model. But those parts are not in alignment with what the model calls for. So I can't sit down with you with a can of green paint and a brand new paintbrush and a brand new canvas and try to paint something in the shade of red or blue or yellow. I don't have the tools to do that. So the model is incomplete. The ingredients for it, the recipe that would call for blue ribbon results, I don't have all the ingredients. So it would be foolish for me to sit out here and try to call something that I know is unlikely. I've done enough. I did 2 days of where I expected certain things. And as soon as it didn't do it, I knew right away, experience taught, I have to stop. If they're new, they don't. They're discovering that. And unfortunately, they may be learning that through painful lessons that they may not be sharing with you. They may be doing it in the quiet, in the privacy of their own trading, where you don't see them showing you their results. You don't see them live streaming. You don't see them showing you what they did before their live stream started or after and later on. Whatever results they had when they first started live stream may have evaporated. We've seen many instances of that this year. So you have to have preserve capital at all costs is rule number one. That weekly expansion, you have to know where is that weekly candle. The one that you're in right now for this trading week or before the week begins, you have to have an expectation, a reasonable expectation. You can't just, well, I got a gut feeling it's going to go here. It's going to go. No, it has to make perfect sense technically.
Order filled. By
the way I teach institutional order flow and where it's likely to go to. Where has it been? What stops has it just recently taken? Who is in control right now in profit? How can they be harmed? Those are the questions you need to ask yourself when you're looking at price. Because we don't have that weekly expansion where it can draw to a very specific level on the weekly chart on that weekly candle, then we are immediately in low probability. So now that means we're in a scalper's market because also I mentioned that daily range. It needs to leave that. Not just poke its head above it. It's got to leave it. Then sentiment will shift. And that's all I care. I don't have my heart set on the ES going higher or going lower. I don't care. But I will submit to you that we are going into a seasonal tendency for May going into the middle of June, where it, not all the time, most time, it drops and goes lower into that mid-June time period. So I'm kind of like tipping my hand to you. I believe it's likely to go lower if we're going to only factor in seasonal tendencies. So if I'm going to forecast for you and share my opinion going forward for the next couple months, I believe that ES will be lower if it follows its seasonal tendency. Something can happen, obviously, that can upset that entire thing. And what we've seen in the last 3 years, they're saying UFOs and aliens exist. So anything can happen, folks. Anything can happen. It's Looney Tune land, and you have to be careful. You have to be very, very careful. And I think that's what's being measured in what price is doing right now. Like there's so many things that are going on, not just in America, but in other countries. And risk is elevated, very, very high. And big money, deep pockets are not in a hurry to assume new risk right now. And that's just investing 101. I mean, you have to have some measure of institutional sponsorship for the market to want to move, not because it's the buying and selling pressure, but there has to be some measure of sentiment to allow for this dance that has to be there. And right now, there's a vacuum. That's why you're seeing price behave like it does. Short little runs, which takes us to that list again. For high probability, what did I teach you when we were doing the live sessions? What constitutes a high probability 5-handle run? And I think that's the low hanging fruit objective. Can you use what I taught in that model to get 2 handles and 3 handles and be done? Yes. But the chances of you as a new student or a new trader being well, disciplined to just stop when you get there, have a limit order to get that 2.5, 3 handles and stop. Now, there's nothing inherently wrong with that. So, I mean, you hear me talk about 5 handles, minimum 5. That to me is a goal that you should strive for. You won't hit it right away. You'll grow into it and you'll outgrow it over time. But to me, I think that's a reasonable target for someone that doesn't know how to trade, that's never been consistent, that you start aiming for that. And if you do that, that's fine. You know, you'll outgrow it eventually, but you can make a career entirely off of that. So when I taught you on the live sessions, and I've also taught it in lectures in the Twitter spaces all over the last few months, high probability 5 handle runs need to have what? It needs to have a range that offers how many pips? Oh, I'm sorry, not how many pips. How many handles? This is a way to test yourself. If you're following along on Twitter, how many handles does the range have to potentially deliver for you to get a high probability 5 handle run? 10 handles. So if the price run that you're looking at, anticipating, you want to see if it can offer you 10 handle total movement. Not that you're trying to get the full 10. You can over time grow into that. But I taught that it needs to have a range to offer at least 10 handles. Now, with that in mind, let's think about this for a second, folks. We have had what? This dude. I knew he's going to come here and talk to me. I got to roll these windows up. Start to look like I'm a little bit more antisocial. So we have low probability because the weekly chart doesn't have a clear draw where it can go higher or lower for a specific level. So right away that we're in low probability. And we are in a trading range on that daily chart where we have seen wicks and you don't want arguments. You don't want anything like that. You want everything's balanced. And that's what you're seeing in price action right now. In ES, in Nasdaq, we are in a point of balance. There has not been anything introduced that caused an imbalance. Look at that. Look at the range I showed you on the daily chart for ES, that shady little area. I tweeted it this morning again. Inside that range, we've seen expansion up and down, back and forth, back and forth. Now imagine that range was an empty space and you had a crayon and you were 5 and 6 years old again, and you were instructed to color that in. That box that I shaded is essentially been colored in, both up and down entirely. So it's balanced. Price has traveled up and down in that range, both ways, multiple times, multiple days. So where's it going to go next? I am submitting to you, and I've said this last week, I don't have a clear indication where it wants to go. So
Order
immediately
filled.
that checks the first box. I am not in high probability conditions. So I'm not live streaming. I'm not going to sit on Twitter and call levels that I know that's likely to not pan out. I'm not going to feed the trolls. They're having a heyday with the 2 days I said, I don't know what I'm doing, and this is what it is. Let's just get out here and spend time together. I don't need to